Hello and welcome to the Upshot for August the 24th. I'm Andrew Gagan. Well, today's reports have come from COL, Domino's, WiseTech, Elmo, Tabcorp, Aluka and Worley, just to name a few. That being said, let's take a look at today's top three. Well, COL's profits rose by 4.3% in its full year results, coming in at $1.05 billion. The result was helped along by extended lockdowns across Australia over the first half, which saw a boost in online sales. It says COVID costs significantly reduced after peaking in January. In FY23, the company expecting supermarket sales growth to cycle the aforementioned lockdowns in the first half and rampant food price inflation for the second. It also expects property earnings to be slightly below those achieved in the 22 financial year. COL's declaring a final dividend of 30 cents a share. Domino's is moving from dealing with COVID to inflation issues, telling shareholders it will cut costs, maximise benefits of scale and lift prices where appropriate. It comes as the company's underlying profit fell 12.5% to $165 million, with network sales up more than 4.5%. It opened 294 new stores in FY22 and has already opened 13 new stores in July. Sales so far this financial year are down on last. It's not providing clear guidance, but will pay a final dividend of 68 cents a share. And here's what Chief Executive Don May had to say.
Australian New Zealand business is already really strong. It's some of our best numbers in years. It's the superstar right now. And I hope that by the time we get the AGM, you can see a positive number. By the half year, definitely see a positive number. We would have already now taken on those three markets. We'll have really strong store count growth and we'll be back to normal momentum. There's always a condition on that in this new world. What else happens in Europe? You know, energy this winter. There are some unknown factors in amongst that.
Elsewhere, logistics software company WiseTech's results have come in at the top end of guidance, with profit lifting by 72% on revenue of $632 million. It will pay a final dividend of 6.4 cents a share and has provided guidance for the year ahead, expecting earnings between 21 and 30% higher. Chief Executive Richard White saying growth will come from increasing penetration across its existing customer base and potentially via M&A. And that is today's Upshot. Thanks for watching.